What's up, YouTube? My name is Ty, financial professional. Welcome to my channel. Please like the video, please subscribe, and catch me every weekday after market close on the Smarter Gambling Show. So here is AVCT, American Virtual Cloud Technologies. This finishes at 27.9 cents today. That is down 9.9%.
And it's gone.
So we've been covering this stock for a while now, ever since this initially squeezed about a month ago. There was some positive PR that the company was looking to sell part or all of its assets. So that in turn caused a squeeze. Not a full-blown short squeeze, but definitely a gamma squeeze there. It went from 15 cents to over 50 cents. So over a 200% upside there. And then it pulled back very significantly, as with every squeeze. And then in the past week, this started mooning again due to speculation and rumors of a buyout. So I can't say if this stock will in fact get bought out or not. Honestly, probably not, but the hype did cause the stock to start gamma squeezing again. So no company-specific news to justify this price action today. It appears like the squeeze is not over just yet. The apes are still in here, still diamond handing, and still squeezing the shorts out, either voluntarily or by force. This was number 2 on StockTwits today, after SPY, had about 3,500 mentions, so once again, we're going to analyze it. So if you guys recall, in the previous shows, I did say that there might be a bit more upside to go, but it's getting pretty dangerous at this point. And if you're up, it would not be a bad time to sell and secure the gains. And in the past few days here, this has been pulling back. And there's probably more downside to go, but we'll get to that in a second. All right, let's jump right in. Let's go ahead and analyze here. So first of all, we have a cup and handle in the making. Bottom of the cup being the low of 13.2 cents. And there can be multiple possible tops. It can be 40 cents, 46 cents, or 52 cents, and longer term, this is part of an even bigger cup and handle, where this has the potential to come all the way back up to the yearly high of 313. Although I do believe the most realistic tops would be 40 cents or 46 cents. But those are all bullish indicators that is telling us that the stock should eventually come back up to one of those tops to complete the cup. So in the previous shows, I did mention that we had this descending triangle forming. I said that this would probably consolidate around 19 cents and break out from there. That was in fact the case. This did break out to the upside. So the descending triangle was and still currently is a bullish indicator. Down here on the MACD, the moving average convergence divergence, the MACD line is well above the signal line. So that's a bullish indicator that is telling us that it may be time to buy. Although it looks like it is starting to reverse, so be careful there. We do have a gap down back at 57 cents. So that's a bullish indicator that is telling us that the stock should come back up to 57 cents to fill that gap. And now for the bearish stuff, we also have a double gap up. First gap up was back at 23 cents. So that's a bearish indicator that is telling us that the stock should pull back down to 23 cents to fill that gap. And the second gap up was back at 18.5 cents. So another bearish indicator that is telling us that the stock should come back down to 18.5 cents to fill this gap. And those two gaps should fill in the short term. Here we had an ascending channel forming where the upper channel was at 50 cents and the lower channel was at 37 cents. So if this broke 50 to the upside, that'd be bullish. If this broke 37 to the downside, that'd be bearish. This did in fact break 37 cents to the downside. So the ascending channel is currently a bearish indicator. And the RSI, the relative strength index, is currently at 54. So very average there, a little bit above average. So that's a neutral indicator. According to the RSI, the current price of 28 cents is right around fair market value. Maybe it should be a little bit lower. And if you guys want to follow along, the link to the chart is in the description down below. So right now this is trading between the sideways channel, the rectangle of 28.7 cents and 27.4 cents. So if this goes to the upside, next levels of resistance would be 28.7 cents, 30.7 cents, 32.3 cents, 34.1 cents, 35.9 cents, 37.7 cents, 40 cents, 41 cents, 42.8 cents, 44.4 cents, 45.9 cents, 47.5 cents, 50.3 cents, 52.1 cents, 53.9 cents, 56.5 cents, 58 cents, 59.8 cents, and then 61.9 cents. There is resistance above 61.9 cents, but we're not going to discuss that right now. And if this goes to the downside, next levels of support would be 27.4 cents, 26.1 cents, 24.5 cents, 23.5 cents, 22 cents, 20.7 cents, 19 cents, 17.6 cents, 16.1 cents, 14.8 cents, and then the low of 13.2 cents. So right now at the current price, 28 cents, the channels to the upside and the downside are pretty decently sized, so expect a regular amount of price action either way this goes. And this did 86.5 million in volume today. Very significant volume, way above the average of 15 million. So the sell-off today was confirmed by the volume. And this is way less volume than we've been getting in the past few days, so it does appear like the squeeze is winding down and coming to an end. Alright guys, just my opinion, not financial advice. So once again, I'm very happy for the apes who made money here, but my opinion is the same. As with every squeeze, significant pullback follows. We are starting to see that pullback now, so I hope apes took your profits, and if not, if you're still up, don't be afraid to secure the gains. Never a bad idea. Again, we have way more bullish indicators than bearish indicators. We have bullish indicators in the cup and handle, MACD, descending triangle, and gap down. And again, we have bearish indicators in the double gap up and descending channel. And we have a neutral indicator in the RSI. So long term, the stock still looks really bullish, but in the short term, I do think this is due for some more pullback. So therefore, if you want to go long, not financial advice. Personally, I would not do that, and I would not recommend that, but it is a pretty decent play at the moment. According to the RSI, the current price of 28 cents is right around fair market value, and there could be more upside to go, although it does appear like that isn't very likely. We are getting a lot of negative momentum and selling pressure here. This should eventually come back up to 57 cents, and from the current price of 28 cents, that would be over a 100% upside potential. So massive upside potential here, and again, this should eventually come back down to 18.5 cents to fill the gap there. And from the current price of 28 cents, that would be about a 35% downside potential. So also some pretty big downside potential here in the short term. So I would say going long at the current price, 28 cents would be a high risk, very high reward play. It's worth a shot in my opinion, especially if you're willing to buy and hold this for the long term. But honestly, if you're a bit patient and you hold off, you should be able to get this back at 18.5 cents where the gap is. So from 18.5 cents up to 57 cents, that would be over a 205% upside potential. So even more massive upside potential there in the longer term, and it really shouldn't go too much further to the downside from 18.5 cents. There's some pretty critical support below that, and it's relatively near the all-time low. So I would say going long at 18.5 cents would be a low risk, very high reward play. Definitely worth a shot in my opinion. You really can't go too wrong there. So I can't support going long at the current price, 28 cents, and if it pulls back, then you can just average down at the supports that I mentioned before. Although personally, I would try to get this back at 18.5 cents. I think that would be an excellent entry. But whether you decide to go long now or hold off for a better price, this should pay off pretty big in the long term. Now, if you want to go short now, financial advice, seems like a pretty decent play to me. You did miss a lot of downside already in the past 2 days here, but it's not too late to go short. There is still plenty of downside to go here. Just a bit risky. Again, this should eventually come back up to 57 cents, which would be over a 100% upside potential. And again, this should pull back down to 18.5 cents to fill the gap there, which would be about a 35% downside potential. So I would say going short at the current price, 28 cents would be a very high risk, high reward play. It's worth a shot in my opinion, but it is a little dangerous, so be very careful guys, because this is still a retail favorite, still a hot stock, so anything can happen. This can continue to squeeze to the upside, although it's pretty unlikely. We have some strong negative momentum right now, a lot of selling pressure. So as long as you're able to withstand the upside pressure here, this should eventually come back down to 18.5 cents to fill the gap there, and that should be some pretty fat tendies to the downside. So I can't support going short at the current price, 28 cents, and again I would cover at 18.5 cents where the gap is for a relatively easy 35% downside gain. So in summary, it looks like the squeeze is over. The stock will have its day again, but it looks like in the short term, it's going to pull back a bit. So going long at the current price, 28 cents is not a bad play if you're willing to buy and hold for the long term. But if you hold off, if you're a bit patient, you should be able to get this back at 18.5 cents, and that would be a much better entry. And if you want to go short, seems like a pretty decent play at the moment. A lot of downside potential, just a little risky. So sorry to everyone who lost money in the stock today, and good luck to everyone currently in the stock and to everyone looking to take a position. This is AVCT, American Virtual Cloud Technologies. Thanks everyone for watching today. I appreciate you guys. Please, like the video, please subscribe, and catch me every weekday after market close on the Smarter Gambling Show. I'm Ty. This is Smarter Gambling. See you guys tomorrow. Peace out.